Good afternoon, friends and traders. Welcome to the Market Recap. I am Dan Hodgman. It is Wednesday, January 13th. We are 1 week away from inauguration, and the House is currently meeting to vote to impeach Trump. We've seen that's the House. Senate right now, Mitch McConnell has come out and said he's not going to press to anything right now. So does it get past the House? That'll be the bigger question. Obviously, maybe it gets to the Senate, but then the Senate, maybe he'll stop it. Maybe it won't happen. Just things to keep our eyes on. It's like 2020 plus 13 at this point. You never know what can happen. Wild things are going on around the world. We've got Bitcoin. Guys, we're up money big today from our picks. Remember our picks? We got Bitcoin and Airbnb. We're making money on both those. We got about $2,000 in our Bitcoin, and we've got about $20 in our Airbnb. We'll take a look at that here in just a little bit. Today, crude oil made a little bit of a move off the open, but really got consolidated, faded out fast. I think we got a breakout in one direction or the other coming. So if you're trading those in that crude oil in the overnight, maybe there's some opportunity. Equities today, Nasdaq finally made some move. It kind of led the rally here today, and now we're starting to see a little bit of a sell-off in the equity markets. End of day sell-off. Getting pretty close to those all-time highs, especially in the S&Ps, and those are struggling to accept up above or get back up to those. So we are kind of back within that channel we were looking at yesterday. Haven't touched it. We're going to extend that here today. We'll talk about that one a little bit more. Gold did nothing all morning, and then the sell-off has begun. Really steady sell-off to the downside until about a half hour ago. It kind of accelerated, never made it down towards settlement price. And then our currencies, really a dull day on the currencies. Euro kind of maintained that overnight trend lower that we saw. But once we opened up, it created a little bit of volatility. It got pretty choppy and kind of just fell flat, essentially where we're trading right now. In the end, that has really done nothing all day. So it is Wednesday. We did have crude oil number come out. I had it pulled up a second ago, and I must have accidentally exited out of it. Here we go, pulling it back up. We had the crude oil to come out already. Draw of 3.2 million barrels. And gasoline inventories are up. Charles, James, and Tanya, good to see you guys there. I hope you guys are all having a spectacular day. Once again, a reminder, tomorrow during the recap, we won't be talking about what happened today. Well, maybe we'll touch on it a little bit. We're going to be sitting down, myself and founder and CVO of Top Step, Michael Patak, is joining me. And we're going to go over some things about Top Step. We're going to take all your guys' questions. I hope you guys all are able to join us tomorrow. Bring some of those questions with. I will be doing my best to make sure I'm keeping up in the chat and passing those questions along to Michael and answering some myself. Murph, good to see you. You got the same shirt on as well. Hey, it's winter time. It's flannel time. We got to be wearing our flannels. And Tim, good to see you as well. All right, so before we get too off topic here, let's go ahead and take a look at some of these charts and go over what we got going on here today. All right, whoops, we got S&Ps open right now. We're going to go back to crude oil. All right, so yesterday we kind of had this channel that we were paying attention to. And the high side worked last night. It really worked last night. It tried to trade up above it. But from there, we have fallen off. The next one that I'm looking at here, we brought our low side channel. Market broke through there pretty strong here, right off the open. Here's what I love. We had the number come out. We had a rally up towards that channel, and that channel now is becoming rejection. We had that rejection. That market broke back down, and like I said earlier, it fell into some intense consolidation. Tim, I see you got questions here. I'll make sure I'll check those here in a minute once we finish going through our charts. Next, let's go ahead and look at the S&P 500, all right, so yesterday we were talking about that this market's really traded in this range here pretty consistently, and as we kind of extend it out, there we go. We're going to extend this out. The market the market rallied to the high side of that range that we were looking at yesterday. It tried to get above it, but quickly rejected and fell back into this range. And so this is something I'm going to recommend we continue to keep looking at. We got to continue to keep looking at that one. So strong rally, blew right through settlement price. We did have that breakdown initially. It got to settles, fast breakdown, but buyers overpowered. That was fast. That was chopped. That was that first half hour or so of the day here. And from there, the rally just ensued to the upside. Now, when we look at the Nasdaq really led the way here this morning. For the first time in a while, we've been seeing Nasdaq be the leader, and it really hasn't been the case. It has not been the case the last few days. It's been kind of the laggard, and today we saw that strength, and we're seeing more strength in the Nasdaq today than we did see in the S&P 500. So nice move to the upside. Really, where I saw an opportunity was a pullback down to settlement price. To me, the trade right there is we can look to see this thing run towards that overnight high, which is yesterday's value area high. That's a great opportunity to say, all right, I can put a profit target there. I can put my stop just on the other side of settlement. And you know what? If we watch that momentum and we watch order flow, that is the only time we can sit there and say, hey, I really like what I'm seeing here. I can stay in this trade. And you really could have. And you could have extended it to the prior day's value area high. Now, once I get away, a couple of days away from other trading days, I tend to stop looking at value areas. I'm only going to be really focusing on points of control. But 2 days out, less than 24 hours from this, or approximately 24 hours from this, we can take a look, or 48 hours, we can definitely take a look at this. I'm not going to put a lot of credence in this, but it really, value area high from Monday worked out really, really nicely here today. So constantly drawing on your charts, making sure you're extending these levels, getting an idea of these areas where these markets can react. Those are things we want to pay attention to. Next, let's go ahead and look at the gold. So here we go. Like I said, gold, kind of a choppy morning and really was a tough trade. I mean, plain and simple. Ranges have been extremely tight in gold here. We're falling into consolidation. When we start to see markets consolidate, we got to start to prepare. Where's this breakout going to come? What's going to be an influencing factor? I think we've got a lot coming down the pipeline geopolitically here in the United States. U.S. dollar, inflation, things might be changing on the 20th and the 21st in the United States policy-wise. So we've got to be prepared, and I think we're going to see a lot of these markets and holding patterns until we get a little bit more information on that stuff. All right, last, let's take a look at these currencies, and we'll get on out of here. Euro this morning was, like I said, volatile open. It really was a volatile open. We had that big sell-off in the overnight. Once this thing opened up, it really made the look like it wanted to rally towards settlement price. And that, to me, I don't think there's a wrong trade trying to take that long. We saw the bounce. We got a little pullback. We had an opportunity to say, hey, I'm going to take this thing long. Probably got stopped out, and that's totally okay. Some trades are not going to always work out, but we're always looking at that initial move. Are we going to close this thing, close the gap back to settlement price? Not the case. Market really kind of continued its downtrend slightly, but we really fell into a pattern here today. This was tough trade, plain and simple. And lastly, let's go ahead and look at the yen. I'll be honest with you, don't have a whole lot to say about the yen here today. Chop, tough trade. We made the move to settlement price. We broke off settlement price. We rallied back up again to settlement price, and we broke off of there. So maybe if you were catching some of these buys on the low side, trying to run it up to settlement price to see if we can maybe look to extend to yesterday's range value areas, that could have been a possibility. We obviously checked value area high yesterday right off the equity open here this morning. Other than that, pretty choppy day across the board. But those are our markets here today, you guys. All right. So, hey, Dan, I have a question. I heard you say several times this program, Podcast Interviews with Traders, that a lot of time you spend trading is spent not doing anything and just watching. My question is, what do you do with the information? I think I'm missing the point you're trying to make when you say this. Oh, great question, Tim. Well, first off, so the way I try to, when I say stuff like that, and I appreciate you bringing it up, and I go back to when this was person to person, back on the days of the floor, right? The market's moving all day. There are people, all right, I'll buy one. Yeah, I got to sell one. Or, you're yelling over the futures. You're trying to hedge a position because the market has moved a little bit, or people are doing some arbs on the screen. Markets are always moving. There's always action in the market, and don't get me wrong with that. But opportunity only comes in certain spans. And a prime example for me, one of the best days I've ever seen trading or been a part of trading, we were on the floor. Typically in a given day trading options, we would do anywhere from 500 to 5,000 contracts in a day. And we had done about 250 contracts. We had an auction at 115. We really didn't do anything. And so when I say contracts, I mean, we're hedging positions. We're trading large positions, holding 10,000 plus options and hedged by 500 bonds or something crazy like that. So if we're only doing 250 in a day, that's a really, really slow day. That might be one or two trades. So it was a really slow day up to this point. And all of a sudden 115 came around, and we went from doing about 250 that day to about 7,000 or 8,000 contracts. So opportunity is not going to be all day long. When the market's open to the market's closed, we're not going to see opportunity in there. So when I look at some of these markets, and I'm going to actually pull back up crude because I pointed this one out yesterday, and we'll bring it back up here again. When we looked at crude oil yesterday, I kind of drew out some channel. Again, loosely drawn, but it kind of paints a picture for us. Once we kind of define these ideas, once you get an idea of where the highs and lows are in a channel, and these channels can be low to high, they can be high to low, and they could be range bound side to side like we saw in the S&Ps. You don't have to be trading in the center of these ranges all the time. Really, we want to find the opportunity when we can manage our risk as cheap as possible. So let's say we started to see this market right here consolidating. Yes, it's in the overnight session, but paints a nice visual picture. We start to see some consolidation. We're seeing resistance as this market approaches this 5110 mark. We can go ahead and say, I'm going to take the short here. I'm going to run that short down until the market starts to stall out. We can get out here. So we're looking, let's say we get in at 5110 and we run this market down to the low side here. We get down to 50.45. We got a nice 65-cent profit there. We can say, all right, market's opened up. We're on the low side here. I'm going to look to see if this market rallies back into this channel. And you can, and this is obviously, again, I'm just using this for aesthetic visual purposes. If we hold on to this trade and we got in back around that 53 or 50.50 mark, and we hold on this market until it comes all the way back up to the high side of the channel. That's an opportunity to look to get out of this trade. So now we're looking at 52. So you can try and minimize the number of trades you're taking in that week. You can take 3, 4, 5 trades, but if you can minimize that risk, if you can define channel, and I use channel a lot. This is how I look at markets. You can use other things to help look at these markets or help define channels. Drawn here. You can use things like VWAP with the standard deviation off of it just to help kind of keep some control. You can start to look for opportunities as the market meets these extremes. And you can use that. And this, for me, when I draw this out, we're showing a really nice trend up in this market. My goal is to trade with trend. And if the trend is moving higher, the last thing I want to do is get caught buying on the highs. Absolutely, we can go ahead and get in here over at $53 as we approach these highs, and we can make money as this market moves up to $53.90. Hell, 93 cents, that's $930 a contract. Not too shabby. But the problem is the risk that's involved with a trade like this. Now, if we wait for this market to show weakness in a trend up market condition, we show that weakness, we come down, market opens up, and we can get in down at 52.50. Let's call it 52.60, and we can hold that trade for a little while and maybe see that move higher, and we can get out as maybe at the end of the day, or if we decide we're holding this and we're not trading and we're doing different things and we're holding positions a little longer, or we're just using this again just as a way of looking at the market. You can hold this trade and go a little longer. So those are ways I look at it. It's about minimizing your risk, maximizing your profits, and cutting down on the number of trades you're taking in a week. Though, because more traders than you can imagine struggle in these what I call dead zones, where this market is stuck you don't know where it's going to go if it's sitting in the middle of a range. When we look at S&P 500, and that was another good example over the last few weeks, we want to find our opportunity. We don't want to, and I'll be honest with you, I'm not looking to take a trade that's going to pay me $200 a contract. I like to take a little bit more risk than that. If I'm taking a trade and I'm going to risk 4 points, or I'm looking to make 4 points, and I can only risk 2 points, that's not going to be beneficial for me in the long term. So I'm trying to find those areas of extremes where I can minimize my risk, but I can really start to maximize my profits. And so as these markets start to approach our extremes, that's where we can start to execute trades. And when we're wrong and we get stopped out, absolutely okay, because we kept our risk relatively tight. All right, sorry if I got a little long-winded there on the tangent. Tanya, that you should be not over trading. And wait for the market to come to you. Much better said than my tangent there. Sean, good to see you. Dan, how do you get precise entries looking at the longer time frame chart? Thank you. Well, Zach, it kind of goes off of, I'm looking for areas of the market to react at. And I'm not trying to save a tick or two. I think if you're in this industry and a tick or two can affect everything, you got to start opening up the way you're looking at it. So I'm looking for a market to approach an area. Maybe that's a 5-point area. And then I can watch as that market approaches. I watch how it reacts. Like today, S&P 500, prime example. 3,800, we've talked about that. 3,800 is kind of a pivotal spot. We rallied today up to 13.5. And we've kind of bounced between 3,800 and 13.5. I think we're in a pivotal spot to find an opportunity. So I'm going to watch how that market reacts in those areas. So I like to define levels well ahead of time before trading. So when I sit down, I get myself, let's see here. I get a card like this. I know I've shown these a bunch on here. I define all my levels, and I have my proprietary stuff that I use based off of some calculations that I have. I start with settlement price, and then I use just given levels that the market told us. Settlement price, that's my center point. I circle that one, I highlight that one, I star that one. That gets all my attention. Overnight high, overnight low, prior day high, prior day low, prior day value area high, prior day value area low, prior week high, prior week low. And sometimes I'll go to months, and depends on what I'm doing. But those are the main ones I'm looking at. Then I'm trying to define some of my own levels within those and just outside of those that I have faith in or my systems have defined for me. And then I give each one of those levels a star rating. So then I look at it and I define reaction to that level. So if it's a no star level, I'm not crazy about it, but I'm going to watch and see what happens. If it's a 1 star, okay, it's got my attention a little bit more. 2 stars, like, all right, I got a good opportunity when the market approaches this one. And 3 star, I am executing at that price. I'm prepared for that one. I'm going to continue to watch that one. And that one's going to continue to get carried over as long as it's within, let's say S&P is a 25, 50 point range. I'm going to continue to carry that price over. So I am a level style trader. Like I've said a bunch of times, I have indicators, VWAP, moving averages, but those moving averages, those are stuff that I start to write down. And if I got a 20-day moving average that the market can approach, I'm going to write that down. That's going to have something to it for me. I think it's going to be really important. Again, it's all what you have to find that works for you. If you're struggling, simplify your charts. I like the higher time frame. It helps me avoid chop. Every price and time frame that you look at in trading, you can apply the same principles and strategies. But when you're looking too small of a time frame, I think you miss out on that higher time frame direction. You miss out on really those extended profits. That's what we're here for. You hear all the time, cut your losses and let your winners run. When you're looking too small of a time frame, you always end up cutting those winners, because then eventually you're going to look at that higher time frame. Son of a gun, I missed that one, or whatever the case is. That's why I like the higher time frame. It slows everything down for me. I think a 30-minute chart gives such great visuals. I can't stress that one enough. So always watching that 30-minute chart, a 4-hour chart. All right, here's what I have. Maybe one day I'll pull up my own personal charts and we'll go through those, and maybe that'll be something fun to do. I run a daily, a 4-hour, and a 30-minute. Those are the 3 charts that I have up all day long in any market that I'm trading. Because that's how I like to look at the market. 30-minute, that's my entry. That's my daytime frame trading execution style chart. I spend a lot of time looking at that. I keep the daily up as a reminder of overall direction, and those moving averages, those 20-day, 50-day, 100-day moving averages, those are important to me. I like to have those as reference points as the market approached. We saw it yesterday with Nasdaq. It seeked out that 20-day moving average to the flipping tick. It was awesome. You don't see that if you don't have the daily up. Then I keep up the 4-hour. I love the 4-hour, Tanya. You know that. That 4-hour chart for me is an acceptance chart. So I'll be watching that 4-hour to watch this S&P market. I'm going to need at least 2 4-hour bars to hold above 3,800 for me to think that we can continue to trade higher. There's obviously bigger factors at play here when it comes to the equities moving higher. Just go look at what's going on in Washington, D.C. right now, and that'll tell you. So, long-winded again. We're going to bring it back here. We mentioned already, we are making some money. Remember, we bought Bitcoin 34,515. Bitcoin, as we sit here right now, $36,675 a coin. We got some money going in that one in our Airbnb. Guys, we made a great buy in Airbnb. I'm not going to lie. I'm pretty amped up about this thing. We paid $148 a share. Today's high was $178.62, and we're ending the day right around $170. So we got $22 in that. We invested $150. We've already got 22 in profits. Not a bad day. Yes, Vlad, that's a good point to make. We had that going on in the 4-hour. See, the 4-hour presents opportunities, I think. I love watching it. I love the patterns that I see on the 4-hour chart. There's so much there for me. I love the 4-hour chart. So we're making money. We are making money. We're up money on the year so far, and we're only 13 days in. We'll continue to keep an eye on these things. Next, let's go ahead and talk about what's going on in economics tomorrow. Let's see here. Jobless claims, 7:30 a.m. Central Time. And natural gas, 9:30 a.m. Central Time. We got that tomorrow. We've touched on news. McConnell's rejecting immediate impeachment trial stuff. The House is trying to push it through. I think it's just going to be a stalemate till next week, the 20th. But what do I know? Let's see. We've got Tesla continues its rally here. We're at $8.50 a share. VIX is down 22.3. James, how much is the principal on Bitcoin Airbnb? We just bought one each. I mean, we're just having fun with it. We got the prices. We're going to see if it goes higher or lower. Everyone said let's buy on January 6th during the recap, so that's what we're going with. Tim, thanks, Dan. Appreciate it. How forthcoming. Oh, absolutely, Tim. I try and be as open as possible. And I think that's what we have to be. First off, we've got to have humility. I'm going to be the first one to tell you when I take a stop, or I have a down day. They're inevitable. It's inevitable, right? I mean, that's part of trading. So we got to be honest with ourselves. Humility is the biggest thing. Once we can have humility about it, we're going to keep going. Tanya, I'm an Airbnb host. Didn't pay the IPO because too many hosts are upset with them lately. Thought they'd go the way of Uber. I got a little bit of Airbnb myself. We all know our founder, Michael Patak's a big Airbnb guy. There's a lot going on in that world, I know right now. Main points, good to see you. And Profit, you're welcome, absolutely. Bitcoin to the moon. Hey, that'd be fun. Maybe we should have actually bought one. I don't have the margins to cover Bitcoin right now because I don't have enough hair. I mean, I would lose my hair trying to trade a one contract of Bitcoin. Exhausting. So, all right. So we talked about VIX. Got economic releases tomorrow. Again, reminder, tomorrow, 3 p.m. during the recap. Instead of doing the recap, we're going to have Michael Patak and myself sitting down answering any question you guys can come up with. We're going to talk trading. He's been in this for more than 2 decades, so he's got some great knowledge. He's been very active lately too, trading. So bring those questions. We'll talk about what he's looking at. We're going to talk about this new brand we got here at Top Step. We got a merchandise store, which is pretty darn cool. So make sure you guys all join us 3 o'clock tomorrow to join us. Bring some questions. Maybe we'll crack a beer and we'll have a good time. Lastly, this date in history. Not a whole lot to talk about, but one that's pretty cool. 1128, the Pope recognizes the Knights Templar. I don't know about you guys, but one of my favorite shows on TV, no matter how conspiracy it could be, is that Curse of Oak Island on History Channel. I enjoy a good treasure hunt, and so they always talk about Knights Templar, so it's got me intrigued. And then the other one, we've all seen this video. If you haven't, go check it out. Johnny Cash, 1968, performs at Folsom Prison. On that note, guys, that's what I got for us here today. I hope you've all had a great day. It is Wednesday. We are now on the downhill run to the weekend. Continue to trade smart. Continue to manage that risk. Continue to keep those stops in place. Don't move those stops. Tighten them up if you need to. And let's keep going. We got a long year ahead of us. We got a lot of opportunity ahead of us. I don't want to see anyone risk their accounts in January or February. We want to be here come December. And we want to be paying big taxes next year because we've all withdrawn so much damn money. So continue to take it slow. Continue to chip away. Let's have some fun. And John will be back tomorrow morning, 8 a.m. Central Time for the market forecast. Until then, stay safe, wash your hands, trade smart, trade well. I look forward to seeing you guys in the markets. Take care, everybody.